Hi everyone. So welcome to chapter 26 of the UAE VAT Diploma, which is a prerequisite to becoming FTA approved tax agents in UAE. This VAT compliance diploma is offered by ATT UK. So chapter 26 on excise tax. The chapter looks at the UAE law on excise tax, which is Federal Decree Law number 7 of 2017, as amended by Federal Decree Law number 19 of 2022, the excise tax law, Cabinet Decision number 37 of 2017, being the executive regulation, as later amended by Cabinet Decision number 108 of 2023 and Cabinet Decision number 52 of 2019 on excise goods, excise tax rates, and the methods of calculating the excise price. The references in this chapter are to the excise tax law, which is referred later on as the excise tax law in title case, and excise tax executive regulation, which has been uh, referred briefly as the regulation in title case, unless otherwise specified. Please note that the term tax in this chapter refers to excise tax unless stated otherwise. So, what are the definitions that have been used? Some of the definitions can be found in Article 1 of each of the three documents mentioned in the introduction above. However, the important definitions will be explained in the sections below as they apply to this law. So the first thing for any tax law is the scope. So scope of excise, anyone who is in business and imports, stockpiles, produces excise goods, or is a warehouse keeper of a designated zone must consider whether they should be registered for excise tax in the UAE. Within the UAE, excise tax shall be imposed on the following activities, otherwise known as the excise activities, which is Article 2 of the excise tax law. So what are we are going to talk a little bit about excise activities, which are production of excise goods in the UAE, where such production was in the course of doing business, import of excise goods, the release of excise goods from a designated zone, stockpiling of excise goods in the UAE, where such stockpiling was in the course of doing business. So all of these um, activities are known as the excise activities. Now we come to excise goods. So these goods shall be known as excise goods, which are tobacco and tobacco products, liquids used in electronic smoking devices and tools, then electronic smoking devices and tools, carbonated drinks, energy drinks, and sweetened drinks. All of these are excise goods. Tobacco and tobacco products shall include all items listed within Schedule 24 of the GCC Common Customs Tariff that are imported. So all those goods that are imported and that are included in the Schedule number 24 of the GCC Common Customs Tariff, cultivated or produced. These goods are either imported, cultivated, or produced in the UAE, including electrically heated cigarettes. Uh, Examples being all forms of tobacco, stemmed or stripped, uh, tobacco refuse, cigars and similar, cigarettes containing tobacco, cigars and cigarettes substitutes, water pipe substitutes, morsel, chopped or processed tobacco for cigarettes, cigars, or pipes. So these are all the examples of various excise goods. Tobacco and tobacco products shall include all items listed within Schedule 24 of the GCC Common Customs Tariff. And these goods are either imported, cultivated, or produced in UAE, and including electrically heated cigarettes. And these are the examples that we just read. Now, DTS regime. There is a digital tax stamp DTS regime, which requires the making of tobacco and tobacco products with a mark which is a physical and digital marker. So there is a digital tax stamp, DTS, uh, which is a physical and digital marker. The purpose of the mark is to validate authenticity of excise goods as well as to track and trace the goods throughout the supply chain in order to verify whether tax has been paid on these goods. The DTS scheme gives end-to-end traceability, also known as full aggregation. So all marks on the relevant products entering the UAE market are required to contain end-to-end traceability. So the whole point of this digital tax stamp is to enable or facilitate end-to-end traceability of the goods that are subject to this regime. Purpose of the mark is to validate authenticity of excise goods, as well as to track and trace the goods throughout the supply chain. Cigarettes of all types, electrically heated cigarettes, and water pipe tobacco are classed as designated excise goods. Cigarettes of all types, whether electrically heated cigarettes and water pipe tobacco, are classed as designated excise goods, according to the Federal Tax Authority Decision number 3 of 2022. There are special regulations requiring importers to mark these and track their movement through the supply chain. So there are regulations requiring importers to mark these and track their movement through the supply chain. Marks must be purchased and stored securely until they are applied. Any marks no longer intended for use or still held unused after 12 months must be returned to the Federal Tax Authority. Let us read again. Cigarettes of all types, whether electrically heated cigarettes or water pipe tobaccos, are classed as designated excise goods according to the decision of FTA. Now, uh, these are there are special regulations requiring importers to mark these designated excise goods and track their movement throughout the supply chain. So it is a requirement on importers. Marks must be purchased and stored securely until they are applied. So any marks no longer intended for use or still held unused after 12 months must be returned back to FTA. Where new marks are agreed, authorization for the old mark is withdrawn. So where new marks are agreed, authorization for the old mark is withdrawn. From 31 December 2023, the supply, transfer, storage, or possession of designated excise goods in the UAE using marks with the old design is then no longer permitted. This is decision number 3 of 2022. So 31st December 2023 is the cutoff date. From this date, the supply, transfer, storage, or possession of the designated excise goods in the UAE using the old design marks is no longer permitted. Cabinet decision number 42 of 2018 on marking tobacco and tobacco products outlines a number of scenarios where marks must be returned to the FTA. So under this particular decision number 42 of 2018 on marking tobacco and tobacco products outline a number of scenarios where marks must be returned to the Federal Tax Authority. Purchase and storage of tobacco marks are covered in FTA Decision number 2 of 2019 as amended by Decision number 5 of 2020. Purchase and storage of tobacco marks. The fee payable by the importer or producer of the for the purchase of marks is AED 0.084 for each mark. So each mark costs 0.084 AED. Marks must be securely stored prior to being affixed to the designated excise goods in accordance with certain minimum security requirements, with records maintained showing the quantity of marks held prior to being affixed, and measures must be taken to ensure marks are not put to unauthorized use. So marks must be securely stored prior to being affixed to the designated excise goods. So these marks are used on each item of the designated excise goods. Note that failure to comply with the requirement to mark certain excise goods will result in administrative penalties that as outlined in Cabinet Decision number 33 of 2019 on administrative penalties for violations of procedures related to the implementation of marking excise goods. So that's Cabinet Decision number 33 of 2019 on marking of the excise goods. So wherever there is a violation, there would be administrative penalties. Liquids used in electronic smoking devices and tools. So excise tax shall be levied on liquids used in electronic smoking devices and tools, whether or not they contain nicotine in accordance with the following custom codes, whether or not they contain nicotine. So even if they don't have nicotine, but if the custom code is this one, 38249999, and that is classified under other items, then excise tax shall be levied on such liquids. This is Article 2 of the Ministerial Decision number 236 of 2019. Electronic smoking devices and tools. This is another Article 5 of Cabinet Decision number 52 of 2019. Electronic smoking devices and tools. Excise tax shall be applied to electronic smoking devices, tools, and similar products, whether or not they contain nicotine or tobacco, in accordance with the following customs codes. So, excise tax shall be applied to electronic smoking devices, tools, and similar products, whether or not they contain nicotine or tobacco in accordance with the following customs codes. These are the codes that are relevant on these custom codes. Goods falling within these custom code, there will be excise tax applied. So these are like the first one is electronic cigarettes, electronic water pipe, shisha, and others. So that electronic water pipe is actually referred as shisha. This is Article 2 of Ministerial Decision number 236 of 2019. Carbonated drinks. Now we come to those Pepsi and Coke and all those other carbonated drinks. A beverage is regarded to be a carbonated drink if it meets all of the following requirements. Any aerated beverage except unflavored aerated water. So that's a carbonated drink. A beverage is regarded as a carbonated drink. Other except unflavored aerated water. Any concentrates, powder, gel, or extracts intended to be made into transformed into an aerated beverage. So any concentrates, powder, gel, or extracts intended to be made into an aerated beverage. So that's the like semi-finished goods. That's a foundation based on which beverage aerated beverage, the carbonated beverage will be produced. However, carbonated drinks shall not include any beverage containing alcohol, even if the product is otherwise considered an aerated beverage. So even if even if it is aerated, if it has if it is carbonated, carbon dioxide is there, but that beverage contains alcohol, then it will not be considered as carbonated drinks. So energy drinks shall include any beverage marketed or sold as an energy drink that may contain stimulant substances that provide mental and physical stimulation, which includes, for example, caffeine, taurine, ginseng, and guarana, and also includes any substances that have an identical or similar effect as the aforementioned substances. So these are basically energy drinks. Any concentrates, powder, gel, or extracts intended to be made into an energy drink, these will also meaning the foundational substances of energy drinks. These are also covered within the definition of energy drink. However, energy drinks shall not include any beverage containing alcohol, even if the product is otherwise considered an energy beverage. So any alcohol content will preclude the drink from the definition of energy drinks. Sweetened drinks. Sweetened drinks shall mean a product to which a source of sugar or other sweetener is added that is produced in any of the following forms. A ready-to-drink beverage intended to be used as a drink. A ready-to-drink beverage intended to be used as a drink. Concentrates, powders, gel, extracts, or any other form that can be converted into a sweetened drinks, like Tang and all that. Note that the term sugar includes any type of sugar determined under the standard 148 of the GCC standardization organization under the heading sugar and any subsequent and relevant standards. So this standard number 48 of the GCC standardization organization, which defines sugar. So the same definition applies. Same definition, same meaning has been taken for the purposes of this excise tax law. Additionally, the term sweeteners includes any type of sweeteners determined under Standard 995 of the GCC Standardization Organization under the heading Sweeteners Permitted in Food and any subsequent and relevant standards. So that's the concept of sweetener. It has been defined under standard number 995 of the same framework called GCC Standardization Organization. The following goods shall be excluded from the definition of sweetened drinks. Ready-to-drink beverages containing at least 75% milk. So if there is milk content up to 75%, then those drinks, those beverages will be excluded from the definition of sweetened drinks. Ready-to-drink beverages containing at least 75% milk or milk substitutes, baby formula, follow-up formula, or baby food, beverages consumed for special dietary needs as determined under the standard 654 of the GCC Standardization Organization under the heading General Requirements for Pre-Packaged Foods for Special Dietary Use and any subsequent and relevant standards. So the one standard of the GCC Standardization Organization, standard number 654, that has been issued for general requirements for pre-packaged foods for special dietary use. So those will also be excluded because they are special dietary use food. Beverages consumed for medical use as determined under the standard 1366 of the GCC Standardization Organization. Standard number 1366, what is that standard? General requirements for handling of foods for special medical purpose. Now, naturally, as the name suggests, these are special medical purposes foods. So they will be excluded from the definition of sweetened drinks. Any beverages containing alcohol. Very simple one line, but most comprehensive. Any beverage that contains alcohol, it will be excluded from the definition of sweetened drinks. Any product which meets the definition of more than one item of excise goods shall be classified as the excise good, which would be subject to excise tax at the highest tax rate and will be taxed at that rate. So let us read again. Any product which meets the definition of more than one item of excise goods. So some item, some product is there which meets more than one item of it meets definition of more than one item of excise goods shall be classified as the excise goods, which would be subject to excise tax at the highest tax rate and will be taxed at that rate. So there will be two different options. One has a higher tax rate, excise tax. One has a lower excise tax rate. So the higher tax rate will be applicable. That's the meaning of it. Any product which meets the definition of a sweetened drink, but which is also a carbonated drink, will be classified as carbonated drink. So if something can meet the definition of both carbonated drink and sweetened drink, then it will be treated as carbonated drinks. Note that where a concentrate is used to make carbonated drinks, energy drinks, or sweetened drinks, had previously been subject to excise tax in the UAE, the beverage produced by combining that good with other products at the selling point for consumption shall not be considered an excise good, and no further excise tax shall be due on it. This we should read again. Note that where a concentrate is used to make carbonated drinks. Okay, so there's a concentrate that is used for making carbonated drinks or energy drinks or sweetened drinks, and that concentrate had previously been subject to excise tax in the UAE. The concentrate had previously been subject to excise tax in the UAE. The beverage produced by combining that good with other products at the selling point for consumption shall not be considered an excise good, and no further excise tax shall be due on it. So basically this is being referred as this is being a kind of double excise taxation is being addressed here. So if you have already subjected one concentrate to excise tax, and later on that concentrate is used to create another good, then that new good that was created from that, it will again not be subjected to excise tax. Otherwise, it will end up in double taxation of excise. For example, a concentrate which is to be made into a carbonated drink at point of retail has already been subjected to excise tax in the UAE. The drink, which is then made from that concentrate at the point of retail sale, is not considered to be an excise good for the purposes of applying excise tax. This is where the concentrate has already been taxed, and the concentrate itself is only capable of being made into a carbonated drink at the point it is mixed with an aerating agent at the point of retail sale. That this thing we see in most of the fast food joints like McDonald's, Burger King, Hardee's, etc., where we go and take a beverage, Pepsi, Sprite, Coke, etc., Mirinda. So what is there? The concentrate is already there, right? So they mix that concentrate with water or aerated water, and that results in that beverage or Coke or Pepsi or whatever. And so at that point, the it will not be subjected to excise tax again. Why? Because the original concentrate was already subjected to excise tax. Responsibility for due tax. The due tax shall be the responsibility of the following: who the person who conducts excise activities referred to in Article 2 of the excise tax law detailed above in the scope of excise. So that person who's running the excise activities, the business, that person is the person who is ultimately responsible. Due tax shall be the responsibility of the that person. The person involved in any of the activities referred to in Article 2 of the excise tax law detailed above in the scope of excise should the person referred to in the point above fail to meet their obligation. So uh, you know in case the person who was conducting the activities, the excise activities, does not settle the obligation, then the person involved in any of the activities referred to in Article 2 of the excise tax law detailed above uh, should be the person referred to in the point uh, above who fails to meet the obligation. If person who's involved, so first one is person who conducts, the other one is person who is involved in any activities. The third situation, the warehouse keeper, in the case of the released excise goods from a designated zone and where the tax due has not already been paid. So that's the responsibility of the warehouse keeper. Uh, so in case some goods were released from a designated zone, then this will be seen as a supply, and the warehouse keeper will be responsible to pay the tax, pay the excise tax on the goods so released, where the tax due has not already been paid. As an exception to the above, the following persons would not be responsible for the due tax. What will be that exception? The person who imports excise goods at a value of less than that specified in the customs legislation. So if a person imports those excise goods at a value less than that specified in the legislation, if such excise goods are accompanied by the person within the frame on an international voyage and are used for non-commercial purposes. So it's a conditionality. If such excise goods are accompanied by by the same person, within the frame on an international voyage. So, some one person was importing those excise goods at a value which was less than uh, specified in the custom legislation, and those goods were um, used for non-commercial purposes on an international voyage, international transportation. So in that case, the there will be no responsibility to pay the excise tax on that. A stockpiler in specific circumstances. So uh, under the excise tax law, certain circumstances have been detailed there, and a stockpiler may also not be subjected to pay the excise tax if certain specific circumstances provided in the excise tax law are met. Regarding registration, for excise tax purposes, a person shall be prohibited from conducting any of the excise activities before registering for excise tax purposes. So only a registered person can conduct excise activities. Any such person shall apply to the Federal Tax Authority within 30 days from the end of the month in which the person carries out or intends to carry out activities mentioned in the scope of excise, or from the effective date of the excise tax law, whichever is later. So 30 days from the end of the month in which the person carries out or intends to carry out activities mentioned in the scope of tax. So those activities which are known as the excise activities. So if someone is conducting those activities or about to conduct those activities, that person must get registered within 30 days from the end of the month in which that person will do those activities. Note, unlike VAT, there is no registration threshold for excise tax. So in VAT, there is a 375K mandatory, AD 375K mandatory registration threshold, but in excise, there is none. Article 3 of the regulation lays down the requirements for the registration application. Article 3 of the regulations. Yeah, these are the excise tax regulation. They lay down the requirement for the registration application. The user guide, registration amendments and deregistration gives details of the procedural aspects for registration of the excise of the taxable person for excise tax. For the purposes of tax registration, the taxable person must meet the following rules and conditions by submitting an application for tax registration containing all the information needed by the FTA via the Emara tax portal. So various information is required by FTA through Emara tax portal, which is the common portal for all types of taxes, whether VAT or corporate tax or excise tax. So there the person has to provide all the information, providing financial security as specified by FTA in the public clarification document. So there is a financial security also that is required by FTA. That has to be provided as well. Complying with any additional requirement in terms of keeping records or reports or resolutions that the FTA specifies and issues. So the person will also need to comply with additional requirements. If FTA shall respond to the person's application for tax registration within 20 business days of receipt of the application. The moment a person applies for the registration with FTA for excise tax purposes, so from the date of the application within 20 business days, FTA must respond. The effective date of the tax registration is the first day of the month in which the person starts to conduct a business activity within the scope of excise tax. So the very interesting angle, because naturally when FTA asks information, they also ask in which month, which date did you start doing the excise activity. So the whatever answer is provided by the person, so that month is considered, and the first day of that month is considered as the effective date of registration. Any person required to apply for registration may also apply to be a warehouse keeper subject to certain conditions. So any person who wants to apply for excise tax registration can also apply as to become a warehouse keeper. The rejection of a tax registration application by FTA does not exempt the person from complying with the provision of the excise tax law and the regulation. So the person would submit a new tax registration application once the required conditions for tax registration are met. So FTA has a set of questions or conditions that must be complied. So if a person does not comply, FTA may reject the application, but does not mean that the person is now not required to get registered. The person is still required to get registered. That person has to make good on the deficiencies because of which his application was declined or rejected, and apply again until that person gets registered. Exception from registration, subject to certain conditions, where a person proves to the FTA that they will not regularly import or release excise goods from the designated zone, that person may be excepted from the registration requirement. So there can be an exception to registration, subject to certain conditions, where a person proves to the FTA that they will not regularly import or release excise goods from the designated zone. That person may be accepted from the registration requirement. The FTA considers regular importation of excise goods to occur more frequently than once in a 6-month period. The FTA considers regular importation of excise goods to occur more frequently than once in a 6-month period, or where they import for the fourth time in 24 months. So that would be considered regular. Once in 6 month period or 4 times in 24 months. So if someone does that, one party does that, then it will be considered as regular importation of excise goods. If they don't do that, then it will not be regular importation, and the person may be granted an exception from registration. Anyone accepted, this accepted means EXCEPT ED, accepted. So exception one. Anyone accepted from the registration requirement as per above shall inform the FTA of any changes to the person that would make that person subject to tax under the provisions of the excise tax law within 20 business days of any changes in their circumstances that may cause them to become taxable person to become taxable per the excise tax law. So if there is any change in circumstances, the person has to come back to FT and tell them about the change in the circumstances that could make them taxable. So the requirement to register may become alive again. Exception from registration does not absolve the person from the responsibility to pay any excise tax or administrative penalties owed in accordance with the excise tax law or any other applicable law. So exception does not, remove all the requirements for excise tax law. That should be very clear in the minds of people conducting those excise activities. FTA may reject a tax registration application if it finds that the applicant has no intention of conducting any business activities within the scope of excise tax, or if the applicant fails to provide the required information and data. FTA can reject the application if if they find out that there is no intention as such to conduct excise activities or to conduct business activities within the scope of excise tax. A person who makes imports for non-business purposes, person who makes import for non-business purpose, maybe personal consumption, is accepted from registration and is therefore not obliged to register. They must, however, still pay any tax due on the imports. That person who is importing any goods, excise goods, for non-business purposes can be accepted from registration. They must, however, still pay any tax due on the imports. So tax they will pay. Now comes the stage of or point of non-registration. If a registrant is no longer responsible for excise tax, so what is a registrant? Someone who is already registered for tax in UAE. That's called a registrant. In this case, we're talking about excise tax, so a registrant of excise tax. If a registrant is no longer responsible for excise tax, that person must let the FTA know within 30 days of such date and apply for deregistration. FTA has 20 business days to respond to the deregistration application. To deregister the taxable person must complete the following. This is quite similar if you really think about it. It's quite similar to the VAT related regulations also. To deregister, taxable person must complete the following: settle all excise tax due, settle all administrative penalties due, submit all tax returns due. So that will, by settling all of that and submitting the tax return that was due to, the person will deregister. To deregister, the taxable person must complete the following. FTA may refuse a deregistration application in the following cases. So FTA can refuse how? If the FTA believes the registrant has the intention to conduct excise business activities within the following 12 months, so they may refuse deregistration. The person does not prove to the FTA that they are no longer a person responsible for due excise tax. So if the person is unable to prove that they will not be responsible for excise tax, then FTA may refuse to deregister. The person has been registered for less than 6 months. Wow. So if person registered recently, less than 6 months, they cannot immediately file an application to deregister. So at least 6 months duration is there. Beyond 6 months, yes, they can apply provided that they are no longer conducting excise activities. If the FTA rejects a deregistration application, it must notify the person of the rejection within 20 business days. So there, the FTA has to come back, and within 20 business days, they have to inform the person. Note that if the registrant ceases to engage in the activities outlined in Article 2(1) of the excise tax law, uh, they will no longer be held responsible for tax starting the day after 6 months from the date they ceased such activities. So, unless they provide evidence to the FTA demonstrating their intention to resume these activities within the following 6 months. So, let us read again. Note that if the registrant ceases to engage in the activities outlined in Article 2(1) of the excise tax law, which are excise activities, they will no longer be held responsible for tax starting the day after 6 months from the date they ceased such activities. They will no longer be held responsible for tax starting the day after 6 months from the date that they ceased such activities, unless they provide evidence to the FTA demonstrating their intention to resume those activities within the following 6 months. So they will no longer be responsible for uh, such activities. But that absolve absolvance period will start after 6 months from the date they ceased the activities. So stopping of the business from that point, 6 month later, that person will no longer be responsible for tax. Until that time, until 6 months, they will stay responsible for excise tax. Designated zones. A designated zone per Article 1 of the excise tax law is defined as any fenced area established as a free zone that cannot be entered or exited except through a designated road, and any area designated by the authority as being subject to the supervision of a warehouse keeper in accordance with the provisions of the regulation. So what is a designated zone? It is, as per Article 1 of the excise tax law, is any fenced area established as a free zone that cannot be entered or exited except through a designated road, and any area designated by the authority as being subject to the supervision of a warehouse keeper in accordance with the provisions of the regulation. Note, a designated zone which uh, fulfills the following conditions shall be treated as being outside the UAE for excise tax purposes. So, a designated zone which fulfills the following conditions, we are going to look at the condition, shall be treated as being outside the UAE for excise tax purposes. A designated zones are any of the following: a free zone that meets the following conditions. Let's see the conditions. Has security measures in place to restrict entry and exit of individuals and movement of goods to and from the designated zones. That's the first condition. No free movement of individuals and goods. Second thing, the designated zone is controlled and supervised by a customs department. So, the custom procedures apply. Third thing, a warehouse keeper has been appointed for the designated zone. So there is a warehouse keeper. Any area specified by the FTA, provided it meets the following conditions. Any area that is specified with the FTA, provided it meets the following conditions. What are those conditions? It has a specific geographical area to begin with. Uh, it has security measures in place to restrict entry and exit of individuals and goods to and from that area, according to controls specified by FTA. and where housekeeper has been appointed. So same three conditions. This is an area specified by FTA. Now, excise goods stored, preserved, or processed in a designated zone or transferred between designated zones will be treated as not released for consumption. So if goods are being transported from one designated zone to another designated zone, these will not be treated as released for consumption. It's a simple transfer. The designated zone shall be registered through an application by the warehouse keeper to the FTA via the Imara tax portal. The designated zone shall be registered through an application. Very few designated zones in UAE, so I mean, around 24 until now. So they must have been registered through Imara tax portal. The FTA may require a financial guarantee upon the registration, renewal, or amendment of a designated zone as determined by the FTA. So financial guarantee is required upon registration, upon renewal, upon amendment. A designated zone will be regarded as being within the UAE. Now that's a very interesting point. By default, a designated zone is considered as not being part of UAE, but it will be regarded as being within the UAE if it alters its operating mechanism or breaches any of the conditions under which it was designated as a designated zone. So wherever that designated zone violates customs procedure, violates the requirements of the excise tax law, that area will not be considered a designated zone. So it will be seen as within UAE. Any person appointed as a warehouse keeper shall be required to control and supervise the designated zone and the transfer of goods without release for consumption to another designated zone in accordance with the following conditions. There are conditions of transfer of goods from one designated zone to another. We'll see what are those. Keep records of excise goods held in the designated zone at any time as per Article 15(9) of the regulation. Uh, so first thing was a record of the excise goods. Second, keep evidence of excise goods being intended for transfer to another designated zone without release for consumption as per Article 15, sub-article 9, clause 9 of the regulation. And then so the second point was intention of transfer, evidence of the transfer, evidence of intention to transfer. Third condition, any such other record as the FTA may specify to be kept in respect of each designated zone supervised by the warehouse keeper. Any such other records as the FTA may specify to keep in respect of each designated zone supervised by the warehouse keeper. So records should be kept for each designated zone. Now, wastage and relief. Generally, goods that are missing or deficient within a designated zone are treated as having been released for consumption. This also applies to goods that are wastage. For example, having become unsaleable over time, all of these goods are in principle subject to excise tax. As outlined in clarification EXTP 007, it is possible for a warehouse keeper to apply for relief from having to account for excise tax on goods in certain cases. So there is a clarification which says that it is possible for a warehouse keeper to apply for relief from having to account for excise tax on goods in certain cases. So what are those? In addition to the above, Article 12, sub-article 5 or clause 5 of the regulation, which is excise tax regulation, states that a deficiency in excise goods or a shortage in their quantity, deficiency in excise goods or shortage in their quantity will not be considered to be a release for consumption. Shall not be considered to be a release for consumption. So there was a wastage, there was a deficiency, there was a shortage. It is not considered as consumption or release for consumption. The warehouse keeper responsible for the excise goods notifies the FTA within 30 days of discovering the deficiency in the stock or shortage in quantity. And it appears that the shortage of or deficiency in the excise goods is due to a legitimate cause accepted by the FTA. So, or there is a natural shortage in the quantity of excise goods in a designated zone where all of the following conditions are met. So there's an alternative scenario where three conditions have been provided. The shortage is a result of natural characteristics of good and meets the standards and controls specified by the FTA. So it is like a natural reason because of which there is a shortage. The owner of the excise goods and the warehouse keep a warehouse keeper notify the FT of the shortage resulting from natural characteristics in accordance with the procedures and mechanisms approved by the FTA in this regard, and the owner of the excise goods and the warehouse keeper keep documents proving the shortage resulting from natural characteristics of the goods and submit them to FTA upon request. Let's read the last one. The owner of the excise goods and the warehouse keeper keep documents proving the shortage resulting from those natural characteristics of the goods and submit them to FTA upon request. So basically, it's a very transparent way of presenting and the evidence that the shortage or deficiency is because of natural causes, natural characteristics. Deficient goods may be destroyed after obtaining FTA's approval. So that's basically destruction of those deficient or wastage goods. The goods may be destroyed after 30 days have lapsed following notification to FTA, unless the FTA has directed that the goods must be retained for inspection. So if notification has been provided by the FTA and FTA has not, said that, retain the goods, we will do the inspection, then within 30, after 30 days, the goods can be destroyed. If during the periods above, the FTA gives the warehouse keeper notice to inspect the goods, they shall be held by the warehouse keeper until such time as the FTA has inspected them and given permission for destruction to take place. So once the FTA actually, reviews the goods, inspects them, then they will give the authority permission to destroy those goods, wasted goods. FTA provides the lost and damaged declaration form via the Imara tax portal. The taxable person owning the goods must complete and submit this form, which is then automatically sent to the warehouse keeper for approval. So there is a form on which all those wastage and damaged goods have to be written, and FTA will send it to the warehouse keeper for approval. Both submission and approval must be completed within 30 days of discovering the deficiency or shortage. So there is a maximum 30 days time allowed for approval of the deficiency and shortage. The excise tax return user guide on the FTA website outlines the submission process. Warehouse keeper. Now, the person who operates or intends to operate a designated zone is required to register as a warehouse keeper. The registration process will require the person to provide information to the FTA. So the person who operates the entire designated zone has to be registered with FTA as a warehouse keeper. It is not possible to operate a designated zone without an appointed warehouse keeper. The effective date of registration shall be the date the application is approved or an agreed date between the person and the FTA. So the effective date of registration shall be the date of the application is approved or an agreed date between the person and the federal tax authority. Details regarding application are given in the public clarification EXTP 010. So this whole thing that we discussed was regarding warehouse keeper which needs to be appointed if for every for each designated zone, because it's the warehouse keeper that effectively runs the designated zone. The FTA will issue a warehouse keeper's registration certificate. This certificate will detail the designated zones that the person is responsible for. So what certificate? FTA will issue a warehouse keeper's registration certificate. And this certificate will detail the designated zones that the person is responsible for, where the person will be allowed to produce or stockpile excise goods without being released for consumption. So the certificate will contain where this person can do the stockpiling, etc. The FTA may impose the following conditions on a warehouse keeper. What conditions can FTA impose? Specify the amount of excise goods that can be kept in each designated zone at any one time. So, maximum amount of excise goods that can be kept in each designated zone at one time. Specify the type of excise goods, the type of excise. First was amount, now the type. Specify the type of excise good that can be kept in each designated zone the warehouse keeper is responsible for. Then may require a financial guarantee for each designated zone that the warehouse keeper is responsible for, as specified in a public clarification. Uh, may FTA may impose additional reporting requirements, record keeping and reports that will need to be submitted to the FTA by that warehouse keeper. FTA may specify the level of physical security required for each designated zone the warehouse keeper is responsible for. So naturally, because there is security measures in place, so physical security, the level of what level of security is needed, FTA can specify that. FTA will also specify what additional checks are required on the goods held in each designated zone the warehouse keeper is responsible for. And FTA will specify the conditions for entry and exit of each designated zone the warehouse keeper is responsible for. So the conditions for entry and exit, what entry and exit of what? Goods and individuals. So which the warehouse keeper will be required to impose. Now, warehouse keeper can also be deregistered. A warehouse keeper is required to let the FTA know via the Imara tax portal of any changes in their circumstances affecting their registration. That is, the person no longer operates the designated zone within 30 days of any of the following. If the person stops operating a designated zone, that person has to inform FTA within 30 days of what? The date on which a warehouse keeper ceases to be responsible for the supervision and management of the designated zone over which they are appointed. So within 30 days of ceasing to be responsible for designated zone, the person should immediately go to FT and inform the date on which the change of circumstances took effect. So, or within 30 days of the date on which the circumstances changed. So the person stopped being in charge of the designated zone. A response from the FTA to this notice will be given within 20 business days. If the warehouse keeper submits a deregistration application, the FTA will end their responsibility for the designated zones, but will not deregister them until they complete all duties and responsibilities from their registration period, following the FTA's specified rules and conditions. So uh, the warehouse keepers, they will not be deregistered until they have fulfilled all their obligations under the excise tax law. They've provided information, all responsibilities, data handover, whatever it is. Only after that they will be deregistered. So what rates are applicable under excise tax law? The tax rate mentioned below are applied to the excise price. So tobacco and tobacco products, there is 100% excise tax. Carbonated drinks, there is 50%. Energy drinks, 100%. Electronic smoking devices and tools, 100%. Liquids used in electronic smoking devices, and tools 100%. Sweetened drinks 50%. So only carbonated and sweetened drinks there is 50%. Other than that, for all tobacco, energy drinks, electronic smoking, whether it is liquid or tools, everything 100%. The excise price will be the higher of the following. So the price published by the FTA for the excise goods in a standard price list, if available, or the designated retail sales price for the excise good less the tax included therein. So that will be the excise price. So it will be higher of the two, either the price published by FTA or the designated retail sales price less tax, less excise tax. In order to deduct the value of excise tax included within the designated retail sales price, according to the second point above, following calculations should be used. For excise goods taxable at a rate of 50% of the excise price, the excise tax shall be equivalent to one third of its designated retail sales price. So naturally, because 50% plus the original price, so it's the price will be the excise tax shall be equivalent to one third. For excise goods taxable at the rate of 100%, the excise price of the excise tax shall be equivalent to half of the designated retail sales price. Naturally, this is reverse calculation, easy to achieve. The excise price for tobacco products will be no less than zero point 0.4 dirhams per cigarette, zero point 0.1 dirham per 1 gram of ready-to-use tobacco or other similar product. So this is the excise price for tobacco products. The excise price of concentrates, powders, gels, or extracts that can be mixed to create carbonated energy or sweetened drinks will be higher of two values. So now there are two different values. Whichever is higher, that will become the excise price of concentrates, powders, gels, etc. The price published by FTA in a standard price list, if applicable, or the designated selling price to the retailer declared by the importer or producer before discounts and excluding tax. Following Article 13, Clause 2 of the Cabinet decision. So, uh, so the tobacco prices also we've already seen the rates applicable on tobacco products, which is 100%. Designated retail sales price. This concept has been used more than once. So we are going to look at what does designated retail sales price mean. The FTA maintains a standard price list of excise goods available for sale within the UAE. The price stated within the price list must be compared to the designated retail sales price of the goods less any excise tax included in that price. So it is that price which the FT maintains. Tax must then be accounted for on the higher of the price stated within the price list and the designated retail sales price. So the designated retail sales price shall be the higher of the recommended selling price of the excise good in the course of its retail sale that is identified. The recommended selling price of the excise goods in the course of its retail sales that is identified, declared, and affixed to the goods by the importer or producer after deducting VAT. So it is basically published prices, easy words. The recommended selling price of the excise goods in the course of its retail price shall mean the price achieved when the excise good is sold for retail purposes directly to the customer. So for retail purposes, when you're selling, for example, cigarette, which is an excise good, so the amount of price that is charged, that's uh, the recommended selling price, and does not include the cases where the price is increased as a result of selling the excise good in a hotel, restaurant, or similar establishment for the purpose of consumption inside these premises. Why? Because usually in such situations, if you know the same cigarette is being sold in a hotel, restaurant, etc., usually it will be a lot more costlier, more pricier than the retail scenario. The average retail selling price of the goods on the market after deducting VAT. So net of VAT price. So average retail selling price. FTA has issued decision number 1 of 2021 on the mechanism of calculating the average retail selling price of excise goods in the market, which is effective from 28 April 2021. Calculation of the average retail selling price for goods to be sold in the UAE market for retail purposes. How is it calculated? Let's see. Article 1 of the decision specifically focuses on excise goods intended to be sold in the UAE market for retail purposes. Article 1 of the decision specifically focuses on excise goods intended to be sold in the UAE market for retail purposes. The calculation of the average retail selling price for these goods requires what? Identifying different retail selling prices in which the taxable person. Right. So FTA has issued decision number 1 of 2021 on mechanisms for calculating the average retail selling price of excise goods in the market, which is effective from 28 April 2021. How? Article 1 of the decision specifically focuses on excise goods intended to be sold in the UAE market for retail purposes. The calculation of the average retail selling price of these goods requires number 1, identifying different retail selling prices in which the taxable person is a party to or participating in during the 12-month period preceding the month in which the calculation of the average retail selling price is performed. Let us read this first point again. Uh, the calculation of the average retail selling price of these goods requires identifying different retail selling prices in which the taxable person is a party to or participating in during the 12-month period, different selling prices during the 12-month period, preceding the month in which the calculation is performed. So it's a 12-month timeline during which various retail selling prices have to be collated, in which the taxable person participated or was a party to. Uh, then excluding any VAT and excise tax included within each identified retail selling price. So we have to remove the effect of taxation, and remove the effect of VAT, remove the effect of excise tax. Where the retail selling price relates to a period prior to the application of excise tax on that excise good, only VAT included within each retail selling price identified in one above should be identified in the one above should be deducted to calculate the tax exclusive retail selling price. Let's read the second. So part again. Excluding any VAT and excise tax included within each identified retail selling prices. So first step was identifying various retail selling prices during 12-month period preceding the month. So, as we were looking at the calculation of average retail selling prices, first step was identify the different retail selling prices and then exclude the effect of VAT and excise, and that is going to reveal the average retail selling price, which is exclusive of tax. Now, in the next step, multiplying the total number of units of the excise goods sold at each retail selling price identified in point 2 above by the retail selling price applicable on each of such excise goods to determine the total revenues in the market arising from the sales of that excise good for the previous 12-month period. So that's basically, if you really think about it, this is weighted average. So we are multiplying each of those retail selling prices with the volume, the number of units that were sold, and we find out the kind of actual revenue. Divide the total revenue in the market as identified in point 3 above by the total number of units of the excise goods sold at the price during the 12-month period preceding the month in which the calculation of the average retail selling price is performed. So that is going to give us a unit price, which is kind of a weighted average. Multiplying the figure resulting from item 4 above by the excise tax rate applicable to the excise good to arrive at the notional excise tax due on the excise good, and then adding the figures resulting from item 4 and 5 above to arrive at the average retail selling price of the excise good in the market, excluding the VAT. So that is how we calculate the sell average retail selling price of that excise good in the market, which excludes VAT. For the purposes of identifying the different retail selling prices under step 1 above, the following basis should be applied. What is that basis? Where the taxable person deals with a maximum of 2 customers, the taxable person shall identify all the different retail selling prices of the excise good sold to these 2 customers. Where the taxable person deals with more than 2 customers, the taxable person shall identify a sample of the retail selling prices at which the excise good was sold, representing at least 50% of the total volume of sales and involving a maximum of 3 different customers, or the recommended selling price of the excise good as specified by the producer of the excise good, where the excise goods have not previously been sold for retail purposes in the UAE. So third case is where goods have not yet been sold for retail purposes in the UAE, but there is a recommended selling price for that excise good as specified by the producer of the excise goods. So substitution of the average retail selling price for goods not to be sold in the UAE market for retail purposes. Let's see. Article 2 of the decision stipulates the approach to determine the average retail selling price for excise goods that are being exported outside the UAE or are being used in the production of a new excise good, and the original excise good is not sold for retail purposes in the UAE. The article takes into consideration different scenarios to determine the corresponding average retail selling price. For goods that are being imported for the purpose of being exported outside the UAE, for goods that are being imported, the goods that are being imported for the purpose of being exported outside the UAE, uh, the import value of the excise good would substitute the average retail selling price. The import value of the excise good would substitute the average retail selling price. The import value would include the customs value, the value of insurance, freight, and any custom fees that would be applicable on the import of the goods, excluding VAT. For goods, which is meaning the original excise goods that are being imported and used in the production of a new excise good. So some original excise goods being used in the production of a new excise good. And the original excise good is not sold for retail purposes in the UAE. The import value of the original excise good would substitute the average retail selling price. So this topic that we are discussing, all of this is substitution of the average retail selling price for goods not to be sold in the UAE market for retail purposes. So in one scenario where excise goods are produced in the UAE for the purposes of being exported, the average retail selling price of the excise goods in the market shall be the price at which they are sold for export. So let's read again, where excise goods are produced in the UAE for the purpose of being exported. So basically the average retail selling price of the excise good in the market should be the price at which they are sold for export. So the idea was that these goods that are being exported, they're not being sold in the UAE market. So if they were being sold, what would be the price? So in this scenario where these goods are being exported, then the export value will be considered as the selling price, where excise goods are produced in the UAE for the purpose of being used in the production of a new excise good. Where excise goods are being produced in the UAE for the purpose of being used in the production of a new excise good. And the original uh, excise excise good was not sold for retail purposes in the UAE. Original excise good was not sold for retail purposes in the UAE. Let me read that again. Where excise goods are produced in the UAE for the purpose of being used in the production of a new excise good, and the original excise good was not sold for retail purpose in the UAE, then the average retail selling price of the excise goods in the market shall be the price at which the goods are designated for sale to the producer of another excise good, before calculating any deductions or offers. So uh, basically, one excise good was about to give rise to another excise good, where excise goods are being produced in UAE for the purpose of being used in the production of a new excise good. And the original excise goods was not sold for retail purpose in the UAE. Then the average retail uh, selling price of the excise goods in the market shall be the price at which the goods are designated for sale to the producer of another excise good, before calculating any deductions for offer. So uh, basically, the producer is buying those goods, right? So what is the price that that producer is paying? That will be considered as the average retail selling price of the original components, excise goods. The article also specifies that any change of intention to the usage of the excise goods should be reflected in the determination of the average retail selling price. So, intention of the usage of the change in the intention of the usage of excise goods should be reflected in the determination of the average retail selling price. Should the goods be subsequently intended to be sold in the UAE market for retail purposes, then the relevant excise taxable person should refer to Article 1 of the decision to determine the corresponding average retail selling price. So purpose changes, the price may also change. So there's another article on exemption. Article 12 of the excise tax law states that the excise goods that are exported shall be exempted from tax. So if the excise goods are exported, they shall be exempted from tax. Usually export attracts zero rating, but in case of excise goods, they will be exempted. The details of that exemption and how it has to be evidenced are found in Article 14 of the excise tax regulation. Excise goods exported will be exempt from tax where they have not been released for consumption in the UAE and have not been previously subject to tax in any of the following cases. So, where they are exported to a location outside the UAE, provided they are transferred to the point of export in suspension and in accordance with the customs law and the conditions as per Article 15 of the regulation. So if they are, if these goods are excise goods and they are being exported and also exported outside of UAE, then they will be exempted basically. Where they have been consumed in the course of an international journey, deporting departing from the UAE, and they are transferred in suspension to the point of export in accordance with the customs law. So if this they have been transferred to the point of export in suspension is common in both scenarios. So there's custom suspension regime. So if you put a good inside into a custom suspension regime, then it acquires a particular status. So if it is in a custom suspension regime and they are consumed in an international journey, then they will be exempt for the purposes of excise tax. Where they have been purchased from a duty-free shop by a person who will immediately export the excise goods on the condition that they can prove that the goods will be leaving the implementing states at the point of sale. So if a person purchases the excise goods from a duty-free shop and immediately exports them, the you know out and exports them leaving the implementing states, all the implementing states of the GCC which have implemented the excise tax law. So if that in that case again those goods will be treated as exempt. A direct export qualifies for tax exemption if the following conditions are met. What are those conditions? A direct export qualifies for exemption. First one, physical export. The goods are physically exported outside the UAE by the supplier. If that is the case, physical export outside the UAE, then the goods qualify for exemption. Supporting documentation, the exporter retains one of the following. So now what are the usual supporting documents? A custom declaration and commercial evidence proving the export, or shipping certificate and official evidence proving the export, or customs declaration proving the suspension arrangement of customs duty. So if the goods are put into a customs suspension regime. So if any of these three evidences are available, then supporting document will be deemed as fulfilled, qualifying the export for exemption. Condition of goods. The goods remain unused, unaltered, or only minimally prepared for export between the time of supply and export. So goods should not, the condition must not change. It should not be altered or anything. An indirect export qualifies for tax exemption if the following conditions are met. An indirect export qualifies for tax exemption if the following conditions are met. What are those conditions? Export by overseas customer. So if it is an indirect export, by the way, so export by overseas customer, goods are physically exported by an overseas customer to a location outside the UAE. That's an indirect export. Supporting document, what will be the supporting document? The overseas customer provides one of the following: the customs declaration and a commercial evidence proving the export. That's one. Or a shipping certificate and official evidence proving the export, or a customs declaration proving the suspension arrangement of customs duty. Any of these is availed, it will be seen as if the supporting documentation requirement has been fulfilled. And these indirect exports will be eligible for exemption. And same thing about the condition of goods as well. The goods remain unused, unaltered, or minimally prepared for export between the time of supply and the export. The FTA reserves the right to reject documents submitted as evidence if they are deemed insufficient to prove the excise goods departure from the UAE. In such cases, the FTA may specify alternative evidence requirements based on the nature of the export or the goods. So FTA can basically reject the documentation. And in that case, FTA will identify that what other things, alternative evidence you need to provide. Customs departments are responsible for verifying the type and quantity of exported excise goods against export documents. Custom departments are responsible for verifying the type and quantity of exported excise goods. So who's responsible to verify the type and quantity? It is the customs department, and they should verify against exported documents. The process follows established customs procedures and is guided by the tax risk matrix determined in coordination with the FTA. Note: an overseas customer is defined as the person who is not a resident in the UAE and does not have an establishment and is not a registrant for tax purposes in the UAE. So that is the overseas customer, not a resident, not a registrant, not registered for customs duty or VAT, anything. Uh, so that's an overseas customer. Article 1 of the customs, Article 1 of the excise tax regulation also defined official evidence to mean an export certificate issued by one of the customs departments in the UAE or a clearance certificate issued by one of the departments by one of these departments or competent authorities in the UAE. So it can be a customs, it can be a you know an export certificate issued by customs department, or it can be a clearance certificate by one of the departments or competent authorities in UAE regarding excise goods leaving the UAE after verifying their departure from it, or any document or clearance certificate certified by the competent authorities in the country of destination stating the entry of the excise goods. So, on the, a similar certificate, a clearance certificate or an export uh, certificate could be verified by the counter authority in the other country as well, where the destination country, the country of destination will have a competent authority like a customs department, excise department, whichever the case may be. But they may also provide a clearance certificate, and that would be acceptable. Additionally, commercial evidence has been defined as the document issued by sea, air, or land transport. So naturally, whenever we are dealing with the excise tax and exporting, especially, so there is official evidence, there is commercial evidence. Official, we saw, the clearance certificate, export certificate, etc. This is called official evidence because this is issued by the government authorities, the customs authorities, etc. But commercial evidence is something different. This is the shipping evidence, basically. The bill of lading, airway bill, land landway bill, etc. These are known as the commercial evidence. Lastly, shipping certificate is defined as the document issued by sea, air, or land transport companies and agents proving the transfer and departure of excise goods from the UAE to outside the UAE. So that's a shipping certificate. So what is shipping certificate? It is defined as a document issued by sea, air, or land transport companies. What is shipping certificate? It is a document issued by sea, air, or land transport companies and agents, proving the transfer and departure of excise goods from the UAE to outside. That's called the shipping certificate. Now, another very important topic, tax returns and payment of excise tax. So there is a tax return for excise. Taxable persons shall submit a tax return to the FTA at the end of each tax period through the procedures set out by the FTA. A taxable person is required to submit those tax returns to the FTA no later than the 15th day of the month following the end of the relevant tax period. So what happens? A taxable person is required to submit those tax returns to the FTA no later than the 15th day of the month no later than the 15th day of the month following the end of the relevant tax period. So uh, usually a tax period is usually 3 months, but let's see. Note that if the 15th comes on a weekend or a national holiday, then the due date will be moved to the first working day after that, after the holiday. So if 15th comes on a national holiday, then the very next working day, basically. Any person receiving excise tax or issuing an invoice, including excise tax, must settle it to FTA. The payable tax shall be settled through the means specified by the FTA. The taxable person shall pay the tax liability no later than 15th day following the end of a calendar month. So in this particular case, it's very different. So excise tax return has to be filed on a monthly basis, actually 15th of the next month, subsequent month. The customs department shall reconcile the quantity of excise goods imported into the state with the declaration of importation received from the importer before releasing the excise goods, and where the person is not a taxable person, it shall check the payment of any due tax and fees. If the person is not a taxable person, it shall check the payment of any due tax and fees and reconcile the quantity of excise goods exported from the state with documents of export. So in case so there are two things, imports as well as and export. So customer department will reconcile the quantity of goods imported and how much was exported. Procedures for reporting are outlined in the user guide, excise tax user guide returns. Now, another very important and interesting topic, suspension of excise tax. Registered clearing companies uh, with a TINCO uh, account, TINCO account, can use the clearing company uh, TINCE registration form to apply for suspension of the excise tax. Suspension of the excise tax due on the excise goods that will import on behalf of the importers. So, who can do that? Registered clearing companies with a TENCO account can use the clearing company registration form to apply for suspension of the excise tax due on the excise goods. Suspension of the excise tax due on the excise goods that they will import on behalf of the importers. So what will happen if the excise tax on those goods that will be imported is suspended? As part of the registration process, the clearing company must provide a guarantee amount to FTA. Upon successful registration, they can suspend excise tax on imported excise goods up to the value of this guarantee. The suspended tax will be released once the excise goods are exported. Suspended tax will be released uh, once the excise goods are exported. If any of the imported excise goods are consumed within the UAE, the clearing company must pay the excise tax due on the consumed amounts. So the idea of suspension is that the clearing company does not have to pay the excise tax until the goods are exported. A person will be considered to be a stockpiler. Now we are reading the stockpiler. The person will be considered to be a stockpiler when they own excess excise goods. Excess excise goods. So excess means extra or over some limit in free circulation and available in the course of doing business in the UAE, where tax on such goods has not previously been paid, returned, or deferred. Paid, returned, or deferred. So that is stockpiling. A person will be considered to be a stockpiler when they use excess excise goods, when they own excess excise goods in free circulation and available in the course of doing business in the UAE, where tax on such goods has not previously been paid, returned, or deferred. Excess excise goods shall mean excise goods on which the following applies. What applies? Owned by the stockpiler on the earliest date the tax obligation arose. Owned by the stockpiler on the earliest date, the tax obligation arose, uh, or an increase in tax obligation arose, or the date the excise tax law came into force. So let's read it again. Excess excise goods shall mean excise goods on which the following applies. Owned by the stockpiler. So those excess excise goods are owned by the stockpiler on the earliest date the tax obligation arose, or an increase in the tax obligation arose, or the law became active, excise tax law. So earliest of these dates. In excess of the stockpiler's average monthly stock level, uh, for that type of excise goods, whether purchased or produced, as determined over a 12-month period, starting 1 month before the date specified in point A. So in point A, it identifies the earliest date that the tax is applicable on excise goods. In excess of the stockpiler's average monthly stock level, uh, for that type of excise goods, as determined over a 12-month period, starting 1 month before the date specified in point A, starting 1 month before the date. So, you know, in the first we had uh, talked about it, the date. Like the first point we were discussing was excess excise goods. What are excess excise goods? They shall mean excise goods on which the following applies. What applies? Owned by the stockpiler on the earliest date, meaning these goods were owned by the stockpiler on the earliest date the tax obligation arose. So there was a tax obligation that we can due, or there was an increase in tax obligation, or there was a transitional period where excise tax became effective. So in short, there was a tax obligation. There's emphasis on tax obligation, excise tax obligation. Uh, so in excess, so uh, in excess of the stockpile's average monthly stock level for that type of excise goods as determined over a 12-month period, starting 1 month before the date in point A, uh, acquired by the stockpiler before the date specified in point A. So in point B, it mentions a date which is even 1 month before the trigger point date. What is that trigger point date? It is that date on which the excise tax obligation arose. Now, that could be the date on which uh, you know an excise activity had happened, supply was made, excise supply was made. So because of that, tax obligation arose, or because of the change in the rate, an increase in the tax obligation arose, or it was an older date where when excise tax law became into force. So that is a rare situation. So that this is a date on which the obligation arose. But in B, there is another date. It is 1 month before this date. So and both of these dates are giving rise to tax obligations which are applicable to excess excise goods. Uh, Excess excise goods shall mean excise goods on which the following applies. So A and B, we're looking at C now. acquired by the stockpiler before the date specified in point A. So in point A, we had talked about the first date on which excise tax obligation arose. So acquired by the stockpiler before the date specified. So excise goods would be those goods which were acquired by the stockpiler even before this date, the first date of tax obligation, excise tax obligation. And what is there in D? The stockpiler intends to sell these goods in the course of conducting business in the UAE. So these are all features of the excess excise goods. And the topic that we are reading is stockpiling. So, you know, if you, you know, if we try to simplify what we see here is that these, the action of stockpiling is a person will be considered to be stockpiling when they own excess excise goods in free circulation. So that okay, that was a relatively easier to read sentences that a person will be seen as stockpiling if they own excess excise goods. But then the question arises, what are excess excise goods? So the answer is these are such goods on which all of these A, B, C, D are applicable. Now, what are these? Now, uh, excess excise goods are those goods on which excise tax obligation has already arisen. That's one. On it is earliest of the three dates, either the date that the excise tax obligation has arisen, or because of a change in the law, an increase in the tax obligation has arisen, or the date when the excise law came into force. So it can be earliest of the three dates. Fine. But what about the next point? It says in excess of the stockpile's average monthly stock level for that type of excise goods as determined over a 12-month period. So if you take the excise uh, goods levels over a 12-month timeline and we look at the average of that, in excess of stockpile, average monthly stock level, excess of the monthly stock level, that extra over and above level of the stock value, which is above the average stock level, uh, uh, as determined over 12 months, starting 1 month before the date specified in point A. So we consider, you know, so the 12 month that we are looking at, so 12 readings are taken, but the starting point is like 1 month before the the 12 dates, 12 cutoff dates, monthly cutoff dates. 13 dates are being dealt here. So based on this B point, we find out an over and above level of stock. That's that particular over and above is actually the excess excise goods uh, acquired by the stockpiler before the date specified in point A. So these goods were acquired before the triggering of the tax obligation, and the stockpiler intends to sell these goods in the course of conducting business. So that was the concept of stockpiling. As an exception to point 2B, so if you look at two excess excise goods, B, that was how we calculated the excess level. As an exception to point 2B, where the average monthly sales of excise goods for the period of 12 months prior to the date referred to in point 2A above is calculated. Um and it appears that the stockpiler has excise goods exceeding 2 months of each, exceeding 2 months of such an average, uh, having disregarded the monthly stock level of such stockpiler. Any goods exceeding the 2 months level shall be considered excess and tax shall be due. So, basically the summary of what is written here is that once we have calculated calculated the excess tax, and we have calculated the average monthly stock level, and we find out that the excess is up to 2 months, it appears that the stockpile piler has excise goods exceeding 2 months of such an average, 2 months of such an average, having disregarded the monthly stock level of such stockpiler, any goods exceeding 2 months level shall be considered excess and tax shall be due. So if there is excess level, the person will have to pay excise tax on it. Where the calculation results in excess excise goods under the average monthly stock and the 2 months sales average, the excess excise goods will be considered the higher value. So where the calculation results the excess excise goods under the monthly stock, average monthly stock and 2 months sales average, the excess excise goods will be considered the higher value. So we take two different thresholds. One is the average monthly stock, and then there is the 2 months sales average. Whichever is higher, that will be considered as the excessive excise goods. A person in the course of conducting business shall keep audited records showing the quantity of the stock of excise goods from the date excise tax law comes into effect. So record keeping is a must for the purpose of determining the stock of excise goods. Note that the person fails to keep audited records, the whole stock will be considered excess excise goods. Wow, that's a very tough condition. If the record keeping is flawed, if the records are not audited, the whole stock will be considered as excess excise stock. What does that mean? You will have to pay excise tax on that excess excise stock. Release for consumption. Goods are released for consumption when neither of the following has occurred: producing excise goods or releasing the excise goods from a designated zone and offering such for free circulation. Releasing the excise goods from a designated zone and offering for free circulation. So this, if goods are released for consumption when either of the two has occurred, either excise goods are produced or they are released for free circulation from the designated zone. If we look at point, the first point above, uh, excise goods shall be treated as produced at such a time the goods reach the stage they are ready to be held out for retail sale. So first point was producing excise goods, right? So when will the goods be seen as produced? When they're ready to be held for retail. Fit for consumption or sale, where the goods are not intended for retail sale. So if the whole idea of producing goods is not retail sales, then we'll see whether they are fit for consumption. Then third, ready to be sold to a retailer if the excise goods are of the type which are not fit for consumption until they are combined with another product at the point of retail sale. So yeah, it can also happen. The goods that are produced in their current condition, they're not ready or suitable for sale. But if they are combined with another product at the point of sale, they will be able to be sold. So if that is the case, then again it will be seen as goods have been produced. So the production of excise goods shall be construed. Leaving a designated zone and entering free circulation will be at the occurrence of any of the following. The excise goods uh, leave a designated zone unless they are uh, moved unless they are moved to another designated zone without being released for consumption, or will be exported in accordance with Article 14 of the regulation. So let's read again. Leaving a designated zone and entering the free circulation uh, will be at the occurrence of the following. The excise goods leave a designated zone unless they are moved to another designated zone without being released for consumption, or will be exported in accordance with Article 14. So unless they're see goods, excise goods move from one designated zone to another designated zone, then they are not seen as released. But if they leave one designated zone, but they do not go to another designated zone, then they will be seen as released for free circulation. The excise goods are consumed or bought for consumption within a designated zone. The goods are consumed or bought for consumption within the designated zone itself. So that will also be seen as free circulation. There is an irregularity in the course of a transfer of excise goods between designated zones, which resulted in the excise goods being released for consumption. There is an irregularity in the course of a transfer of excise goods, irregularity in the course of transfer of excise goods between designated zones, which resulted in excise goods being released for consumption. So yeah, I mean the goods were released, they were somehow consumed, or so they were misappropriated. Anything could happen, so that would be seen as release and circulation. They are found to be deficient, or there is a shortage in their quantity from the designated zone, or during transfer between designated zone, or whilst being held in a suspension regime in accordance with the customs legislation. So if there is even a deficiency identified or shortage identified in the quantity from when they moved from a designated zone to another designated zone, in between there was an issue, then it will be uh, seen. Then it will be seen as they have gone into free circulation. As an exception to the last point above, the release for consumption is not considered to have happened if the warehouse keeper informs the FTA within 30 days of discovering a stock shortage. The warehouse housekeeper informs FTA within 30 days of discovering a stock shortage or deficiency, and the shortage or deficiency is due to a legitimate reason. So we read that earlier on. There can be situations or circumstances where, because of natural reasons, there was a shortage or deficiency, or so if and the stock and the warehouse keeper did inform FTA within 30 days of that. The natural shortage in the quantity of excise goods within a designated zone is recognized if all the following conditions are met. Natural shortage is recognized when the shortage results from the natural characteristics of the goods and complies with the standards and controls of the FTA. Both the owner of the excise goods and the warehouse keeper notify FTA of the shortage following the approved procedure and mechanism. The owner and the warehouse keeper maintain records documenting the shortage due to natural characteristics. So proper documentation, record keeping, and transparency is there, and it is approved as well by FTA. Then only it will be allowed. It will not be seen as free circulation. The term irregularity means a situation occurring during a transfer of excise goods from one designated zone to another, where those goods are not transferred in accordance with the conditions specified under the regulation, or the excise goods are lost or destroyed. The term irregularity means a situation occurring during a transfer of excise goods from one designated zone to another. So irregularity is a situation where, during the transfer some wrong thing has happened. Goods are not transferred in accordance with the conditions. Now, another topic, deductible tax. What is deductible tax? That includes tax paid on excise goods that were exported. Tax paid on excise goods. And when we say tax, we're talking about excise tax. Tax paid on excise goods that were exported. Tax paid on excise goods used as a component of another excise good that is or will be taxed. Tax paid on excise goods used as a component of another excise good that is or will be taxed. Amounts paid to the FTA in error. Amounts paid to FTA in error. So these will be deductible tax. Taxable persons eligible under Article 16 of the excise tax law may deduct tax in their tax return for the period when the right to the deduction arose. So taxable persons can deduct excise tax in their tax return for the period when the right to deduction arose. The value of the deductible tax must equal the amount of tax previously paid on the same goods. So for the same goods you already paid tax, then you can deduct that amount of tax. To establish the value of deductible tax, taxable person must provide evidence of the tax previously paid on excise goods if requested by FTA. The evidence must be submitted in the manner specified by the FTA. If the tax was paid by another party in the supply chain, the taxable person must retain a copy of the purchase invoice, a declaration from the supplier confirming tax payment and its value, and evidence demonstrating that the goods being claimed are the same as those on which the tax was previously paid. So, evidence of the same goods, evidence of payment, etc., everything will need to be provided to FTA if FTA so desires. Tax deductions are allowed when excise goods are exported outside implementing states, exported to an implementing state where tax has already been paid, or consumed during an international journey departing from the UAE for deductions based on export. Taxable person must submit either a customs declaration with commercial evidence or a shipping certificate with official evidence proving the export. So let us read this paragraph again. Tax reductions are allowed when excise goods are exported outside implementing states, exported to an implementing state where tax has already been paid, or consumed during the international journey departing from the UAE. For uh, for deductions based on export, taxable persons must submit either a customs declaration, so either a customs declaration with commercial evidence or a shipping evidence. So like it can be a, so in order to deduct tax on exports of excise goods, the export evidence has to be there. It has to be, it can be either official evidence and or commercial evidence. The FTA may reject submitted documents if they do not provide sufficient evidence of the excise goods departure from the UAE. FTA may reject submitted documents if they do not provide sufficient evidence of the excise goods departure from the UAE. Uh, in such cases, the FTA may specify alternative evidence. So the evidence provided was not, crystal clear. It was erroneous. There was mistakes, etc. So FTA may reject it, but they may say that, ask an alternative evidence to provide. Tax is considered paid if the goods were purchased with tax already applied, or if the right to deduct tax arose in the same tax period when the tax was due. Tax is considered to be paid if the goods are purchased with tax already applied, or if the right to deduct tax arose in the same tax period when the tax was due. Customs departments are required to verify the type and quantity of exported excise goods against export documents following their established procedures and the tax risk matrix coordinated with FTA. Uh, so there can be tax refunds also, where the value of a taxable person, meaning excise taxable person, deductible tax exceeds the value of excise tax payable to the FTA. that person have excess refundable tax. So the amount of tax that was payable to FTA was less. The deductible tax that was there, it was higher, then that would give rise to a refundable tax. The taxable person is required to carry forward the excess refundable tax and offset it against his excise tax liability payable to the FTA in future tax periods until the excess refundable tax has been fully utilized. Unless what? The excess refundable tax has been fully utilized. If after the tax has been carried forward for a period of time, the taxable person has excess refundable tax remaining, they may apply to the FTA for a refund of the excess refundable tax. So it works just like the VAT refund situation. So you can either apply for a VAT refund, or you can allow the tax credit to be carried forward. So later on, if there is liability, it will be offset against that tax credit. A claim for a refund of excess tax owed to a taxable person must include all information and data required by the FTA and be submitted through the method specified by FTA within 5 years from the date the person becomes eligible to apply for the refund. So this refund, the maximum time is 5 years. So if someone wants to file a refund request, the maximum time allowed is 5 years from the date the person becomes eligible to apply for the refund. The FTA shall refund any excess tax to the taxable person where it is satisfied that the taxable person is entitled to a refund. So only those cases will be entered in where FTA is satisfied that a person is entitled to refund. Subject to the refund claim being valid, the refund must be made by the later of 2 calendar months of submitting the refund claim. Refund must be made by the later of 2 calendar months of submitting the refund claim. Um, or it is later of 2 calendar months of submitting a refund claim, or where the FT undertakes an audit of the claim for refund within 21 days after the conclusion of the audit. Once the audit has been concluded, FT undertook an audit for the claim of the refund, and now audit is complete. So now the person can claim within 21 days of the conclusion of the audit. FT is not obligated to refund any remaining excess tax to the taxable person if less than 2 tax periods have passed since the end of the tax period when the excess tax arose. So less than 2 tax periods have passed. Meaning 2 tax periods are even 2 tax periods are not complete yet. So FT is not obligated to refund any remaining excess tax to the taxable person. FTA may, at their own discretion, refund the amount of excess tax before the end of the 2 tax periods. In the following situation, there can be a situation where it will be refunded. What are those situations? The taxable person's registration is cancelled. Okay, so there may be a situation where a taxable person's registration is cancelled, where the taxable person will be conducting taxable activities in the future, and for at least 1 year following, there is likely to be excess refundable tax. So let us read this point again. The FTA may still allow a refund before completion of the 2 tax period in the following cases, where when the taxable person's registration is cancelled, okay, excise tax related registration is cancelled, or where the taxable person will be conducting taxable activities in the future, and for at least 1 year following, there is likely to be excess refundable tax. So it seems that for the next 1 year following, there will still be excess refundable tax. Then FTA may make the refund. Where a taxable person has failed to submit a tax return for any tax period, the FTA may withhold any refund until the outstanding returns are submitted. That's a general rule. That's a cardinal rule, always applicable wherever someone has not filed any returns. No refund will be entertained. FTA will require that all the missing returns be filed and then refund. There is an excise tax refund user guide detailing the procedures for online claim. There is an excise tax refund user guide detailing the procedures for online claims. Note that the procedures for tax audit, tax assessments, and voluntary disclosures for VAT apply mutatis mutandis to excise tax. So all the usual tax procedures for VAT and corporate tax, they also apply to excise tax. The excise tax law references the tax procedures law. A non-taxable person conducting business may apply for a refund of excise tax previously paid by a taxable person. Or non-taxable person conducting business may apply for a refund of excise tax previously paid by a taxable person if they directly export the goods if they directly export the goods outside the UAE. That's a very rare situation. To qualify, the excise goods must be physically exported and the applicant must provide evidence proving the tax was paid in the UAE, including the amount paid. The applicant must also retain either a customs declaration with commercial evidence of export or a shipping certificate with official evidence of export. So, uh, a non-taxable person conducting business may still apply for a refund of excise tax, provided certain conditions are met. Applicant must also retain either a customs declaration with commercial evidence uh, of export or a shipping certificate. Furthermore, the excise goods must not be used partially or fully or altered before export, except as necessary to prepare them. Preparatory nature changing is allowed. So I guess we still have a few pages left, but we will finish this inshallah. Uh, right. For indirect exports, where an overseas customer physically exports uh, the goods, the non-taxable person may also apply for a refund under similar conditions. They must prove evidence of the tax paid in the UAE and obtain from the overseas customer or their representative documentation such as a customs declaration with commercial evidence of export or a shipping certificate with official evidence. The excised goods must remain unused and unaltered before export, apart from essential preparations for export. For indirect exports, where an overseas customer physically exports the goods, the non-taxable person may also apply for a refund under similar conditions. They must provide evidence of the tax paid. So basically either commercial or official evidence. Note that FTA reserves the right to reject the submitted documents and then they will ask for alternative evidence as well. Additionally, customs department are required to verify the quantity, type and quantity of the goods against the export documentation issue. So that was the indirect export. Tax refund in special cases where the tax is incurred by a foreign government, international organization, diplomatic bodies, and missions. A claim for refund of tax may be made subject to the following conditions. So what are those conditions? So basically, we are talking about diplomatic and government, international governmental, entities. Excise goods are acquired exclusively for official use. So it was a diplomatic mission, foreign government, etc., maybe an international organization. Uh, they acquired for official use excise goods on the condition of reciprocity between the UAE and the foreign entity, or the refund is consistent with the terms of any international treaty or other agreement concerning the liability to excise tax of such a foreign government, international organization, or diplomatic body or mission. So there will be, so UAE will definitely seek a condition of reciprocity, same kind of a treatment, the should be afforded by the other country as well, whose diplomatic mission or international, like the foreign government, UAE is supporting by offering them a refund. Same thing should be there in that country as well for UAE. Excise goods are not acquired for the purposes of resale or any other commercial purpose. It should be purely for official purposes. So if these conditions are met, there may be a, that entity, international entity, foreign government, etc., they may claim a refund, subject to certain conditions, evidence being provided, where excise tax is incurred by a person who is registered in an implementing state, who has paid excise tax in the UAE and has then exported the excise goods to another implementing state and paid excise tax in that implementing state. A claim for a refund of the excise tax may be made. So, where excise tax is incurred by a person who is registered in an implementing state, that's another unique scenario. Some person, some entity is registered in an implementing state, Saudi Arabia, Qatar, etc. Or if Qatar has already implemented excise tax, uh, who has paid excise, who has paid excise tax in the UAE and has then exported the excise goods to another implementing state and paid excise tax in that implementing state. A claim for a refund of the excise tax may be made because same goods cannot be subjected to tax twice in GCC for excise purposes. If in one place it is paid, they may claim a refund. Subject to Article 21 of the Excise Tax Law, a refund of tax may be made according to the following. A claim must contain the information and data set out by the FTA. So pre-required information should be provided by the FTA. The claim covers a minimum period of 1 calendar month. So the refund of excise tax, minimum 1 calendar month. The claim covers tax paid on goods where the goods have a value not less than the value prescribed by decisions by the minister. So claim covers tax paid on goods where the goods have a value not less than the value prescribed by the decision. So the value of the goods on which excise tax was paid and now being claimed, that value should not be less than the declared value, prescribed value by a decision of the finance minister in UAE, which lists the values of such goods. The claim is supported by the documentary evidence specified by the FTA. So necessary documentary evidence should be there. FTA shall decide on such claims within 20 business days of an application being submitted. So FTA will respond within 20 business days. What about records? As per the Article 24 of the Excise Tax Law, following records are mandatory. Records of all produced, imported, or stockpiled excise goods, exported excise goods, and evidence of of such export stock levels, details of lost or destroyed items, tax records that include the for due tax on imported excise goods, due tax on produced excise goods, due tax on excise goods that have been stockpiled, deductible tax according to Article 16 of the Excise Tax Law. So all of these records should be maintained by the taxable person. That will also be required to keep the following records. What are those? Price lists of excise goods produced, price list of excise goods produced, imported or sold by them. They must be able to produce these at the request of the FTA. So basically, price list of the exported of the excise goods, which is produced, or imported, or sold by the taxable person. The list referred to in the point above shall be sufficient to identify the excise goods produced, imported, or sold by them, and shall include details of the value of the goods. So, price lists are a mandatory information that taxable person should maintain. The tax record must be kept in accordance with the time frame as specified in the regulations on the law on tax procedures and discussed in a previous chapter. So, in line with the statute of limitation, which is 5 years, 7 years, for certain items, it is more even. So usually it is 5 to 7 years. The warehouse keepers must maintain certain records and shall provide such records to the FTA upon request. Where it's now the responsibilities of warehouse keepers have also come in. The records retained should be sufficient to identify the stock levels of excise goods at any time, the value and quantity of goods brought into the designated zone, value and quantity of excise goods leaving the designated zone and released for consumption, value and quantity of excise goods transferred to another designated zone with details of the receiving designated zone, the value and quantity of excise goods transferred from the designated zone for export. So, for if there were any exports being done from a designated zone, all the relevant information, the value and quantity of excise goods produced within the designated zone production, the value and quantity of excise goods subject to deficiency or shortage, and that which was or will be destroyed. So even those goods which are, if you remember, we discussed about it, natural causes or genuine reasons, etc., which will be later on destroyed with approval of FTA, with approval of the warehouse keeper, etc. So all of that information is part of the records that need to be maintained. These are called excise records. Now, the statute of limitation in general, FTA may not conduct a tax audit or issue a tax assessment in relation to excise tax more than 5 years, by default, from the end of the relevant tax period. There are various exceptions to this limit. So, some exceptions, yes, we'll see. Generally, 5 years. The FTA may conduct a tax audit or issue a tax assessment more than 5 years after the end of the relevant tax period. The taxable person has been notified of the commencement of audit before the end of the 5 years period, provided the audit is completed or the tax assessment is issued within 4 years from the date of notification of the tax audit. So it can go beyond 5 years, the default period, if in the last year or in any year for that matter, there has been a notification by the FTA that we may conduct your tax audit. We will conduct your tax audit, and if that notification comes from the point of that from the date of that notification until the next 4 years, that tax audit should culminate. FTA may conduct a tax audit or issue a tax assessment more than 5 years after the end of the relevant tax period if the tax audit or assessment relates to a voluntary disclosure submitted in the fifth year. This is very similar to what we read in the VAT as well. It's very same. So in the fifth year, there was a voluntary disclosure. Now the audit can continue beyond 5 years as well, provided that it is completed or the tax assessment is within 1 year from the date of submission of the voluntary disclosure. So whenever the voluntary disclosure was given in the point in the fifth year, from that point, one more year is allowed for the culmination of tax audit or assessment. The above limits may be amended by way of cabinet decision. The time limit to submit a voluntary disclosure by a taxable person is 5 years from the end of the relevant tax period. Until that time, uh, voluntary disclosure can be made. If the In the case of tax evasion, that's a very rare situation and it's a sensitive situation as well. In case of tax evasion, an audit may be conducted or a tax assessment issued up to 15 years from the end of the tax period in which the tax evasion occurred. So for evasion cases, it's the statute of limitation is not 5 years but 15 years. In the case of failure to register, an audit may be conducted or a tax assessment issued up to 15 years from the date on which the taxable person should have registered for excise tax. So, the one was tax evasion and another is all in a way tax uh, um, it's close to tax evasion because some taxpayers should have registered, but they did not. So effectively, they did not pay the tax to the government. So it's also of a similar and sensitive nature. So 15 years statute of limitation applies. There is also scope of for the 5-year limit to be overridden via the promulgation of subsequent laws. So later on, any law may come in which may override the 5 years. So some penalties have also been addressed. Article 22 of the excise tax law specifies the following. Notwithstanding the stipulations outlined in the tax procedures law, the FTA shall issue an administrative penalty assessment to the taxable person and notify them of the same within 5 business days from the date of issuance if the taxable person committed any of the following violations. What violation? Failure to display prices inclusive of tax according to Article 11 of the excise tax law. Failure to display prices inclusive of tax according to Article 11 of the excise tax law. Failure to comply with the conditions and procedures related to the transfer of excise goods from a designated zone. Failure to display prices inclusive of tax that according to Article 11, that's a violation. Failure to comply with the conditions and procedures related to the transfer of excise goods from a designated zone to another and the mechanism of preserving, storing and processing of such excise goods. So basically interzone transfer. Uh, Failure to provide the FTA with the price list of excise goods produced, imported, or sold by the taxable person. These are all, violations. As per Article 23 of the excise tax law, and notwithstanding the instances of tax evasion referred to in the law on the tax procedure, a person may be deemed to have committed tax evasion. Oh my God, in the following circumstances. So these are very, very sensitive circumstances because these are cases of tax evasion, bringing or attempting to bring excise goods into or out of the UAE without payment of the relevant excise tax due in part or full. So that's a case of tax evasion. Producing, transferring, acquiring, storing, transporting, or receiving excise goods where the excise tax was unpaid with the intention of evading the payment of the excise tax due. Placing false distinguishing marks on excise goods with the intent of evading the payment of excise tax due to receiving unlawful refunds. Let's read again. Placing false distinguishing marks on excise goods with the intent of evading the payment of excise tax due, due or receiving unlawful refunds. So, wrong marking. Submitting any false, counterfeit, or unreal documents, returns, or records. So that's a fake. That's a clear case of evasion, tax evasion, with the intent of evading the payment of excise tax due to receiving unlawful refund. As mentioned above, failure to comply with the requirements to mark certain excise goods will result in administrative penalties as outlined in the Cabinet Decision 33 of the 2019 on administrative penalties for violations of procedures related to the implementation of marking excise goods. Note that certain administrative penalties outlined in Cabinet Decision number 49 of the 2021, specifically mentioned in Chapter 23, apply to excise tax and should therefore be considered alongside the information provided above. That with that, our chapter 26 on excise tax is completed. Um, I hope you guys would be able to refer. All the chapters are here in within this YouTube channel. Please refer to these chapters. Each of the topics is explained in detail. So, and in case if you find any queries or questions, please reach out to me. My contact details are mentioned on the channel. Thank you very much. Take care. Bye bye. Good luck with your VAT, ATTs, UAE VAT diploma. Thank you very much. Bye bye.